housing market is showing more signs of softening as mortgage rates rise. Concerns are also growing over rising interest rates, a possible recession, and the health of the global economy. Business reporter Alexis Christoforous joins me live now for more on this. Alexis, we got some new numbers today on home prices. So what do they tell you about the health of the housing market in general?
Things took a big turn in the month of July, Diane. The highest mortgage rates in more than a decade have thrown cold water on the once red-hot housing market. So this week, the average rate on a 30-year fixed-rate loan at 6.72%. Now, that is more than double where it was at the beginning of the year. As a result, home prices decelerated in July at the fastest pace on record. Now, that doesn't mean home prices are at a bargain basement price, but it does mean that the frenzied home buying we saw during the height of the pandemic is indeed cooling off. So while home prices are still higher compared to last year, on a month-to-month basis, we are seeing home prices in 20 U.S. cities slip 0.4% in July. That is actually the first monthly decline we've seen in prices in 10 years. The biggest price drops are on the West Coast, where affordability was already strained. So home prices in San Francisco, for instance, fell 3.6% in July. Seattle, homes there down 2.5%. In San Diego, home prices slipping 2% in July. Prices in New York, meantime, were flat. We're seeing bidding wars no longer the norm. Listings are lingering a little bit longer on the market because demand has collapsed, and less supply is also coming onto the market. There was a recent report from Zillow that showed new listings slid almost 23% in August from a year earlier. So all of this means transactions are tumbling. Sales of previously owned homes fell for a 7th straight month in August to the lowest level in more than 2 years. And Diane, home buyers are now backing out of deals at a record pace, especially in cities that were real estate hotspots during the pandemic. So we're talking about cities like Tampa, Atlanta, Phoenix. A lot of deals there not going through to closing.
Right, and those are the areas that saw a huge rush during the pandemic.
Exactly.
Seems to be cooling off now. Now, the stocks seem to also be trying to rebound after sliding into bear territory. How is that working into all of this?
Well, when we talk bear territory, just to sort of put a pin at the end of that sentence, you've got markets now falling 20% from their recent high. This is scary stuff, and a lot of folks can get very emotional and want to try and sell their stocks. A lot of people believe that stocks are on sale right now. So if you have time on your side, meaning if you don't need the money in the stock market for the next 3 to 5 years or more, you can actually be buying stocks at a discounted rate at the moment. And when we do rise, which we inevitably do, you're going to be able to take advantage of that rise.
All right. Alexis Christoforous, great to have you as always. Thank you.
Thanks.
Hi, everyone. George Stephanopoulos here. Thanks for checking out the ABC News YouTube channel. If you'd like to get more videos, show highlights, and watch live event coverage, click on the right over here to subscribe to our channel. And don't forget to download the ABC News app for breaking news alerts. Thanks for watching.